Today, we're going to be talking about the cost of waiting to buy real estate and specifically buying your first property. If I haven't met you yet, my name is Connor Webb. I'm a mortgage loan originator licensed in Washington, Oregon, California, Idaho, and Arizona. I've been doing this for a decade now, and I've heard people time after time say that they're going to just wait to build up a larger down payment or waiting for rates to drop or waiting for home values to decrease, and they end up just losing on equity in the long term. So in this video, I'm hoping to illustrate a little bit in detail on why you shouldn't wait, why you should move sooner than later and just start building that equity. Starting with the US housing market, the big picture, real estate nationally has been a stable asset over the long term. You look at the starting point of this chart to where we currently are. There are peaks and valleys and things will go up, they'll go down. But if you buy and hold real estate, it's going to trend upward over the long term. Real estate nationally averages an appreciation of 3 to 5% per year, but something to note is that inventory is up about 17% year over year. With rates being higher, there has been fewer buyers in the market, so less demand means that supply is now higher. But at the same time, interest rates are on a downward trend and they should continue over the next couple years. Interest rates are down somewhere between 0.6 to a full percent, depending on when you look at it. But when looking to buy real estate, of course, you want to look at the local market that you currently live in and see what the factors are. But where I live and where I'm going to be talking about is Clark County, Washington, Ridgefield, Washington. This area in general has exceeded the national average in real estate gains, especially over the short term. So now moving to the local housing market, this is Clark County, Washington. Real estate locally has been on the higher end of the national average when looking at overall appreciation. The average sales price as of October 2025 is now up to $646,000 in Clark County. As you can see from 2016 onward, it is a upward trending line. Of course, you can see a small dip here as inventory has risen. Housing values have flattened off a bit, have come down slightly depending on the situation. Sometimes it just is a matter of people listing their property too high in the first place. But Clark County, Washington has seen 65% appreciation over the past 9 years. This is averaging a 7.18% gain over the past 9 years. Of course, the COVID years, we saw this heavy spike here, which definitely, draws the average upward. And talking more about COVID, looking at the price index from 2020 through 2024, over those 4 years, we saw about a 40% increase. We are not going to see the same appreciation moving forward. I think we'll see somewhere in the 2 to 4% range, more along the national average, but there is certainly more demand here. There's a lot of new homes being built. It's just going to be moving up I-5 in the long term. And speaking about moving up I-5, Vancouver essentially is completely saturated. There's no more land to build on, especially with single-family residences. That's why Ridgefield, Washington has absolutely blown up the past 5 years. From 2020 through 2025, the annual increase in population has been 7.3%, which is the highest and the fastest growing city in Washington the past 5 years. And that is highly likely to continue for the next decade plus. Essentially, Ridgefield used to be a small farm town that was a very small population, small schools. But like I described, these past 5 years, since Vancouver has become so saturated, the demand has pushed up into Washington. There's no income tax up here compared to Oregon. That farmland is now being bought up by developers left and right, and there's new builds going in like crazy. I can't speak to the rest of the cities on this list, but Ridgefield, Washington, fastest growing city out of 392 cities in Washington, and that is likely going to continue. Buying and holding real estate in Ridgefield right now is going to be a great play in the long term. So let's say you're on the fence of wanting to purchase versus wait. Let's take a look at a scenario just to see what exactly that looks like. And what I'm getting at here is that waiting for rates to drop or waiting to save for 20% down could cost you big time. Assuming a $500,000 sales price with just a 3% minimum down payment conventional loan, let's say that you decide to wait a year, and let's say that rates drop from 6.5% down to 5.5%. Let's also say during that same time frame that the next year that we see 4% appreciation in the market. I think it's going to be somewhere between 2 and 4%, probably closer to 4%. Well, when you plug in those numbers, if you wait a year from now, you're going to be buying that same house for $520,000 compared to $500,000. Your minimum down payment, which is 3%, has now gone from $15,000 to $15,600. Your total loan amount, which is 97% of the value of the property, has gone up from $485,000 to $504,400. Yes, your loan payment has gone down about $202 because of the decrease in interest rates. Yes, your mortgage payment is now lower. However, over that time, you have lost out on $20,000 of appreciation gain. You've lost out on the $600 of down payment. So when you add these numbers up, that's essentially the $20,000 of purchase price and $600 of down payment. That is lost equity and down payment of $20,000 $7,600. You divide that by the $202 a month that your mortgage payment is now lower, and it will now take you 8 years of paying that same mortgage to see the benefit or the break-even point of waiting. Meanwhile, those people that did buy at $500,000 a year ago, they have now refinanced to that lower rate. They were able to secure their equity gain and their purchase price back at the $500,000 mark. They now have the lower mortgage payment. And I'm telling you right now, they are the happier campers. Keep in mind that this is not including the amount that you paid for rent that entire year that you decided not to purchase. Of course, when you're looking at an amortization schedule, not all of your payment is going towards paying down your principal. A lot of it is going towards paying your interest, but you still do pay down a certain amount of your mortgage principal over that first year, which is not being factored into this number here. Going through another scenario just to drive the point home, this is at a 20% down payment and rates are dropping again from 6.5 to 5.5, same appreciation of 4%. You again are buying that same property for $520. The down payment has now increased from $100,000 to $104,000. So now you add $20,000 plus $4,000. That's a total lost equity and down payment of $24,000. You are now paying $166 less per month, which when you do $24,000 divided by 166, that is a 12-year break-even point. I'm telling you right now, if you have the funds to come in with just the minimum down payment, that is all that's needed. That's what my wife and I did 5 years ago, 3% down conventional loan. Just get into a property, stop paying rent, start building equity, and you will thank yourself in the long term. Now, here are some of the big benefits of home ownership as a whole. First off, building wealth through equity as I've described. The principal paydown that you'll be paying over time in just making your mortgage payment essentially builds a forced savings account. It's building equity that is just a no-brainer. It's a forced savings account. And essentially on top of that, you're getting the home value appreciation, which is somewhere between 2 to 5% per year. At the very least, it should track with inflation. And over time, as you do build that equity, your equity now becomes leverage. You can use that to sell down the road and take that equity to put as a down payment on your move-up purchase. Or you could tap into that equity at some point down the road with a HELOC, a home equity line of credit. You could also now turn your current primary residence into a rental long-term, which is what my wife and I are going to do. Another big benefit is the stable and predictable housing costs. Your principal and interest will remain fixed for the 30-year term if you have a 30-year fixed loan. That amount at the very least will not change. Property taxes and insurance can change, but at least you know that the majority of your payment is going to remain the same. With rent, likely your rent payment is going to be increasing on an annual basis and you don't know exactly how much your rent is going to increase. That's completely up to your landlord. With the stability of your payment, it now helps long-term budgeting become that much easier. And like I mentioned, at the very least, this helps protect you from inflation, that 2 to 5%. There are also various tax advantages of owning a home. There's the mortgage interest deduction on an annual basis. There's the property tax deductions that might apply to you. There's the potential capital gains exclusion when selling a primary residence and rolling that into another property. That is massive. I'm not a tax advisor, so don't take my word as gospel, but if you're a single person that owns a primary residence and sells it, you can take up to $250,000 as of the current tax code, $250,000 of gains and move it into your next primary residence and delay or defer the taxes on that gain. If you're a married couple, that moves up to $500,000 of deferred capital gains. You also could have the ability to depreciate the property if you convert it to a rental at some point. Again, consult with the CPA to get the full details of your tax advantages on real estate. And lastly, it helps with overall lifestyle stability and control of your situation. It helps stability long-term for family and long-term planning. It helps your freedom to customize, renovate, and improve your living improvement as you choose to do so. There, of course, is a pride of homeownership and community connection with various other homeowners that are around you. And then there's a sense of permanence that just is not the same as renting. So with that is a brief summary of the cost of waiting to buy real estate and why I think that you should personally get into real estate as soon as possible, stop renting, stop paying off your landlord's mortgage, start building equity. If you have any questions whatsoever, or if you'd like to get pre-approved yourself, reach out directly to me. This is my contact information here, or you can visit leonardconnorweb.com to reach out and connect. And for more content like this, make sure to like and subscribe to the YouTube channel, and we'll see you in the next one.